Good morning, everybody. How are we doing today? I decided that as a special treat, I'm going to take you guys through my morning report process. So this way you can see the full setup. Well, you can't really see the setup, but I'm going to take you through a couple of the screens that I use to figure out kind of what the zones are that I'm watching, where some important things may potentially be, and that. All right, cool. As always, guys, if you like the content, please subscribe, leave me a fun comment to read, and we'll keep pumping out more of this. And of course, as always, you can join us on our Discord channel and hang out with me when I live trade or just participate in the silliness that is our community. All right, guys. So first things first, when I first hop in, I'm looking at my market profile. Now it's going to look a little stretched out to you guys. I have what would you call that? Well, I have a monitor that's flipped on its side. All right. Yeah. So it's taller than it is wide. Okay. So it looks a little bit better when the profile is presented in that form. But the first thing that I start with is I want to know where my overnight levels are, right? So we come to our first screen, our main screen. It is just today's activity. So that means the overnight or the extended hours starts right as we get the overnight session. We have our overnight high, we have our overnight low. Now, I also use a little spreadsheet that I'll show you guys real quick. So nothing super fancy, but this is the spreadsheet that I use. I put in my high, my low, my close, all that fun stuff, and then it gives me some good pivot levels. I used to put them in all manually. I actually use an indicator now that is provided by Thinkorswim that inputs all of these points except for the halfback. The halfback I still have to manually put in. But yeah. So it helps me just kind of keep track of the data as I'm going through. So that way, when I'm actually adjusting it on my charts, I don't forget. So we're just going to write down high and our low. There we go. So that way, when we actually go back to our profile look, we don't have to keep cross-referencing because my memory sometimes is not super good. All right, so we'll set our overnight levels first. Now, the fun thing, of course, about the overnight levels is while I am setting them first, they are subject to change at any moment's notice. So they are what they are for right now. When I write the report is based off of all the levels, but where the overnight activity is currently situated. And yeah, I mean, if it changes right before open, well, there's not so much I can do. So what are we looking at first here? Well, with our overnight levels figured out, we can see that the overnight activity has already started to potentially gap down. So that tells us that we may have gap rules in effect for our first play, which means that the high odds move is the correction of the gap. But of course, if the gap does not try to fill, that tells us that we should try to play with the direction of the gap. So today that would be down. All right, we got our overnight levels. So those are easy. Next up, we're going to adjust our value zones from yesterday. And because we have our market profile chart up, we've got a nice little block that shows us where that all balances out to. So there's our previous day value low, our previous day value high. We're going to adjust our previous day point of control. We don't have to add a VPOC in because this area did in fact cover our point of control from yesterday. And the last thing we're going to adjust on this chart for now is our previous day close. Boom. Okay, so now that we've got those situated, we're going to go back to our main chart and we're going to go ahead and switch our time frame around. So now we're going to look at all of the activity from yesterday, and we're going to turn our extended hours off. We're also going to clean the chart up a little bit, get rid of some of those zones that are no longer in play, some of the lines that we drew. Oh, wow, look at that. That one was pretty good in play yesterday. This is a longer term line. This isn't one that we drew yesterday. Anyways, we're not going to get too concerned about that yet. So we've got our high of yesterday. It's at 388.63. We're going to put that into our handy dandy sheet. And our low at 374. And our close, which we already know, 374.87. Cool. So now that we've got that figured out, we can adjust one of the last data points on our profile chart, and that is our halfback. So our halfback, due to the information that we put in, gives us 381.74. So why is our halfback important? Well, the halfback shows us, quite literally, the halfway point between the high and the low of previous day's activity. So in relationship to the overnight activity, if we've got a concentration of it below the halfback, that tells us that the bears are still in control. Hasn't really resolved anything from yesterday's activity, and that gives us an idea that we possibly could be looking at a new low on the day. This is, of course, if we have overnight activity that's overlapping the previous activity and not actually gapping down. And then consequently, of course, if we're above the halfback, that tells us that bulls are a little bit more in control. As far as our intraday activity goes, crossing back through the halfback typically tells us that one side is trying to wrest control from the other. Now, especially when we take that into consideration with where the concentration of volume was, we had most of it yesterday, just a little bit above our halfback. If we were to clear the halfback, we would then be paying close attention to see whether or not price was accepted, and we tried to rotate up to this thinner volume area here. Because if not, then this would also be a good indicator that, all right, well, it's time to get short because this is failing. But I digress. We don't want to get too much into the technicals or we'll run out of time. So we got those. Next, we're going to look at some of our longer term charts. So we're going to go back to our mainframe. And we're going to switch to the trader report. So the first thing that we've got is we've got a weekly look. Not much tends to change on this chart. Once I've kind of got some of my levels situated and figured out. But really what we're looking at is we're trying to pay attention to how activity's been reacting recently. So we had the rally that came up over the last 2 weeks. And then into this week, we had that test of the 20 moving average. And yesterday brought us right smack dab down to our 200 moving average. Now, this is all on the weekly, right? And on top of that, we had the 50% retracement level and the 61.8 retracement level from our last swing high. So this is a failed attempt to move back through and maybe change some of this. But of course, looking at our moving averages, this was a pretty good risk to reward location to get short, especially knowing that we had FOMC coming. And of course, the fact that, most of us were not expecting anything dovish to come out of that meeting. Now that we're back at the 200, this is going to be an important level for us to watch today, right? So the next thing we're going to do is we're going to make sure that we know where the 200 is on our weekly. Jeez. All right. I guess it's like right smack dab on the low. So we're just going to put that there. 374.87. Now, these aren't levels that you have to write in. I like to write it in just because I don't have a weekly chart up. So if I see something important on my weekly chart, I do make sure that I denote it on my SPY levels all drawing set. So that way it's accessible to me. I can see it, and there's a quick reference, and I don't have to flip back to a longer term chart because I already kind of know what that looks like for the day. All right, so we got our weekly moving average. That's going to be important to us today. And of course, we checked all that out. Other than that, we're probably going to want to pay attention to the 61.8 level if we start retracing up. We're going to be wanting to pay attention to this support level at 370.18. I believe we already have those marked off. We're just going to make sure, though. Yep, so we've got the 370.18, and we've got the 61.8 as well, because these are the all levels. Cool beans. Moving on from our weekly look, we're going to take a peek and see what's been going on the daily. So again, on my daily chart, I do have a different drawing set than my weekly and all that other fun stuff, because there's just, some things that you might want to be paying attention to on these that you might not necessarily pay attention to others. And if I find it important, I make sure I also denote it on my all levels chart. So we had a channel that was building pretty good over the last 2 weeks. But yesterday, as you can very clearly see, we blasted through that. We were at that 50, the 61.8. Those are going to be the same on our weekly and our daily because, well, they're the same high and low. And we lost our 20 and our 50 in one fell swoop. So the level we're going to want to pay attention to on our daily look is going to be that 372.31 support. Potentially that's somewhere where we could see the market decide we've hit this thin zone and we need to move back up, or that could propel us to rotate down towards this high volume node where the point of control is on our 3-month look. And we've already got this marked out on our broader chart, so we don't need to worry about that. We do have the 372 level also there. We are going to update our daily moving averages on that chart, however. So we've got 376.75 for our 20. Yep. Yep, 376.75, and then 381.15 for our 50. Did I say 15 or 50? I think I said 50. 15. I think that was what it already was. That one really didn't change from yesterday to today. Okay. So that pretty much addresses most of the levels that we were going to be interested in drawing on our chart for today. No, not all of them. There are a couple more. We have a VPOC from 1024 that got taken out yesterday. So we're going to go ahead and delete that off our chart because that's not going to be important to us anymore. One of the other things we are going to do is we're going to take a peek at what max pain is today. Max pain, of course, being the point at which the most people are getting squeezed and or puked from their positioning. And today's max pain tells us that 381 is the strike price at which the most calls and the most puts will be feeling pain. Definitely have more puts than we do calls going into today. The put call ratio, according to MaximumPain.com, is 1.92. So that's almost 2 puts for every call. So people are feeling a little bearish. All right. So we got that out of the way. Let's see what's next. All right. We're going to go ahead and figure out if there's any new zones that we need to be paying attention to. So this is my 30-minute candle chart. This is the one that I traditionally use to look for supply and demand zones that could potentially be in play for the day. All right. So here was one from yesterday. Looks like that got consumed very quickly as price moved through it. So we're not going to be worried about that. We are going to look a little bit further back, though. We're going to see if maybe we've got something in here or in here that we should be paying attention to. Maybe. That one's going to be a little bit tough. We already have kind of pushed through it, but it does seem like there's some support forming on the overnight low. We're going to go, excuse me. We are going to go ahead and mark that off just in case it's important. Just in case. Boom. All right. There's a demand zone. Of course, the next one. Yeah, I think that's the level we're going to use. All right. So that's going to be pretty good moving forward. Actually, I kind of like this one. I mean, it's a little bit of a pullback. We had some more orders enter in right there. Yeah, you know what? We're going to mark this one off too. I think we're going to use this because I like the wick on this candle. Yeah, that looks good. All right. So that's going to help us set up potential zones for what we should be looking for if we end up losing. Oh, yeah, you can see our overnight low actually just got pushed even lower. So if we lose the 370.18, we're going to be looking for this zone to be tested for a short play. Absolutely. And if we end up cratering through that zone, we're going to be looking at the next one and then our support at 362.17 for a target low. So that's the way. I mean, that's one of the ways we figure out where our targets are, right? Speaking of targets, we do have two other markers that we're going to be playing with. So should we lose the overnight low, should we lose the support resistance at 370.18, we are going to be targeting down here for our lower target for today. Oh, excuse me. And then, of course, we also have our upper target. And that one is going to be a little bit different. Judging by where activity is currently, I think our previous day close and our 200 weekly is actually going to be our upper target for today. I'm not feeling super bullish going into today, but if we do start, retracing, we close the previous day low and stuff like that, I definitely could see us coming up and at least getting a touch or a test of those levels. So that's why we've got our upper target situated there. Probably could raise it up a little bit, but so here's the thing about targets. You have to think in terms of where everybody is going to be changing direction or taking profit or adding orders. And you're going to want to be a little bit ahead of that. Because remember, we're not playing with orders that are large enough to move the markets, which means we want to be getting out of the position before some big whale gobbles up all of the orders and then traps us in that position. That's where we can end up, seeing some really big, awesome profit. For example, let's say we bought in yesterday, a third of the way down this candle as it was coming up, and we didn't end up getting out when we started breaching that value high. And then all of a sudden, this giant order comes in and drops everything. We get trapped, and what was a huge winner ends up actually becoming a loser before you're able to get out of that position. So Obviously, not every day is going to be as chaotic and wild as that, but that's one of the reasons why you want to front run your targets just a little bit. So my upper target is the previous day low where our close was. But if we look at this candle right after market closed, the low comes down to here, which gives us a little bit of breathing room between our actual target and where we would try to take our profit if we were playing this long to the top side. Okay, cool. We probably could mark in a supply zone up here just in case we come back up and through. I think we are going to do that. Let's see. Not really any candles that I like for it. I guess this one's probably going to be our best bet. Of course, knowing that our overnight high is there. I should also mention to you guys, I'm fairly new to charting out supply and demand zones. So I'm still figuring out the method to the madness and, what constitutes a really good spot and what doesn't. So one of the things that I'm kind of going with now is looking for areas where we do have some pretty close close and open action, but with significant wicks on both sides that front run a rather large movement or what we call an ignition candle. So the reason we do that is that means that there was a lot of activity going on in this small space right here. And when finally a large enough sell order entered to push the market down, that means that orders got trapped in this area here. So technically, or in theory, if price action moves back up to this zone, we should see those orders that are still hanging out start to get filled. I'm sure there's probably a way we could look at some level 2 data to also see if there's orders trapped at particular areas. So that's something that we might look into for the future to start developing our method for figuring out supply and demand zones better. Because remember, they're different than support and resistance, right? Support and resistance are spots where orders enter into the market. Supply and demand zones are where there are orders waiting in the market. All right. There is a distinction there, and it is a specific difference. All right. So we've got some zones that are potentially in play today. First one right out of the gate looks like it might not even be something we should be concerned with, but we're going to leave it on our chart for now. The last thing that we want to figure out where our stop, our short, and our long are going to be based on what we're seeing down here. I think we're probably going to be looking at something like this using our previous day close and our weekly as our target points. And then the 20 moving average. And our overnight low. So unfortunately, that does kind of muddle up some of those lines, but it'll be fine. It'll be fine. We're not worried. All right. So that's pretty much it, guys. That's the process. We take a look at the longer looks, right? So pop back there for a second. We want to make sure that we know where our significant levels are on our daily, our weekly, and then one of my other favorite charts is the 5-day, the week look with the 30-minute extended monkey bars. We can kind of take a peek, see how everything's balancing out with some of the levels that we've established. As you can see where our long point is, right? We've got a pretty thin volume area. So if we do end up overtaking that, we should see that propel us up into the thick of it or where there's more trading volume. So just kind of a reason why we would be looking at that. Then, of course, with our stop and our short position as well. I mean, we were already talking about how we've lost these levels here. Those are potential areas for the market to keep moving down to. But we do want to be aware of overreactions, right? I mean, this was a pretty significant drop. So we could keep dropping, like free falling, But it also stands to reason that we could see some reactivity to this as people deem it being too aggressive of a movement, meaning, the valuation is not where price has been pushed to yet. Um, so that actually brings us into auction theory of value zones and all that fun stuff. When you have a market that is front running value versus a market that is moving towards value. Front running value typically is when you see the overreactions, and those are opportunities in which we can play the reaction to that. And then, of course, if we can deem where value is and the market activity has not quite gotten there, then we can be ahead of that as well. For example, when we were seeing everything kind of come up and price action was starting to condense more and more, we weren't really making those higher highs anymore. FOMC was on the way. Well, that tells us that value is probably struggling to be around here. So, from that perspective, we could probably say value was closer to where our 200 moving average was on our weekly. Now, once that ended up happening, we did see the aggressive move towards it. But the question is now, especially since we seem to be gapping down, is this too aggressive? Has the market price moved beyond where the majority of the big money kind of views valuation being at? I'm just guessing. Obviously, I don't know where the value is. I'm just trying to get some good ideas and put some probabilities in my court. All right, guys. So that's it. At this point, I would write up kind of everything that we talked about, put it into my morning report, and then I would end up posting it in the Discord with, the specific levels that I'm watching, why I'm watching them, and yeah, that's the process. I hope you guys learned something that you can take forward into your trading. Some big takeaways or the highlights that I want to kind of go over before we wrap this video up. Remember to look at your macro first. You want to know what the bigger picture is and start to form your hypothesis on where valuation is either moving to or from based on that. Then when you get to your intraday, that's where you start to pay closer attention to the bigger levels, right? Because those are where your big plays are going to be. We want to keep risk to reward in our favor. We don't want to just try arbitrarily throwing money at the market to figure out what it's going to do, because we need a system. We need our setups. We need things that work for us. All right. So macro, micro, make that money. If you like the content, guys, please like, subscribe, join us in our Discord, hang out with me, um, all that fun stuff. And yeah, have a great day.